$2.4 billion company that owns labels like Calvin Klein, Tommy Hilfiger. You've known it as Phillips-Van Heusen. You now know it as PVH Corp. And joining me now is the CEO of that company, Manny, Chirico, who just rang the opening bell here at the exchange.
Very exciting day.
So the push to rename is you really want to be known as a global company with global brands.
Sure, exactly. With the acquisition of Calvin Klein and Tommy Hilfiger, it really changed the complexion of the company. Those two brands now represent 80% of our profits and about 75% of our revenues. So we just felt it was appropriate now to have a name that really showed the portfolio global company that we are today.
Well, make sense of what we just heard, because we saw consumer confidence come in less than expected. Then in the month of June, we saw manufacturing expanded in this country. So consumers are feeling better, but they're not. They're not feeling better, and they're buying more. That doesn't make sense to me.
Yeah, well, I guess the economic data in general is mixed. They're trying to really understand it. I guess the best picture I could paint for you in the States is, as you work your way up the supply channel, the distribution channel, the consumer is stronger and stronger. So if you have premium brands selling in premium channels of distribution like Calvin Klein and Tommy Hilfiger, which those businesses are really performing well. Some of our more opening price point businesses, the consumer's under more pressure there, and we're not seeing the same level of double-digit growth that we're seeing with the two global powerhouse brands.
It's a split among income levels, it sounds like.
Clearly in this economy it is.
And yet you feel comfortable raising prices. You've indicated you're going to do that in the second half of the year.
Yeah, look, costs of goods are going to be up 13 to 15%, which we're trying to be tactical about it, be cautious about it, put more into the product, but we will be raising retail prices somewhere in the 7 to 10% range in the holiday season, I believe, along with the rest of the market. And hopefully the consumer will appreciate the value they're getting.
You believe that to be in line with the rest of the market? I mean, is that coming because of cotton costs? Is that coming because of manufacturing costs? Where is that pressure coming on you from?
Yes, it's coming. We're really seeing inflation in the supply chain, raw materials and commodities, cotton and other raw materials, and then labor costs globally have gone up about 20%. So those two items together, even when you can move production, do things, we're still seeing 13 to 15% cost increases throughout our supply chain.
When you say labor costs are up globally, usually that means China. That's sort of the world's Walmart, or it has been. That era seems to be ending, though. It's getting more expensive to produce there. We just saw manufacturing numbers overnight that came in less than expected. But you're expanding there to their consumers now.
That's correct. I mean, the good news is, yes, those producing countries are truly becoming consuming countries today. So India, China have really become growth areas for us, selling product in. They love American brands. Our two lead horses there, obviously, are Tommy and Calvin. But that's what we've seen. And for us, about 35% of our production is in that part of the world, where the balance is in other Asian markets, Middle East. So we're very well balanced from a production point of view. But China does set the market when it comes to cost of products. So if there's inflation in China, you'll find inflation in Bangladesh, in the Middle East, in India. It's just the nature of the business.
You spent, what, $3 billion to acquire Tommy Hilfiger in 2010. Is there room for more acquisition this year?
I think we've doubled our size. We'll end this year somewhere between $5.7 and $5.8 billion in revenues. I believe I'd be comfortable saying we will start aggressively looking for acquisitions beginning in the fourth quarter of this year. So we are starting to think about it, strategically trying to see what makes sense for us. But for 2012, acquisitions will be back on the table. We've paid, by that point, we should have paid down over $700 million of the debt that we did take out. Our balance sheet will be much stronger. And we've exceeded all of our earnings expectations. So that combination has got us well ahead of schedule.
So around Christmas time, we can be expecting you to add another brand or make. Well,
I think you could see us starting to really look. I think 2012, we will be aggressively looking to add another brand.
All right. Can you give us an indication of what product lines? I mean, you're going to stay in.
Well, I think it'll be two types. It'll be another global lifestyle brand like a Tommy Hilfiger or a Calvin Klein, or it'll be adding to the base of those two brands, meaning a licensee that we would want to either run that territory or that product category. So we'll be making investments in Calvin and Tommy, or looking for another global lifestyle brand to add to our portfolio.
All right, Manny, it's so good talking to you.
Always good to see you, Margaret.
Thanks so much for giving us an indication of what you're seeing in the U.S. and